What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and yeah, let's get straight into things. So as you can see, dollar, go and watch yesterday's video if you haven't already, but you'll see that dollar managed to trade down just as we anticipated, starting to work its way towards that 4-hour imbalance that I had my eye set on in yesterday's video. So that's nice to see, and this is what I'm talking about. So yesterday I was mentioning how I wanted to see price rally in the morning to give us an entry. Now don't get me wrong, you can see price dropped, moving right up to about 4 o'clock, and then we saw the rally, which gave us a nice setup for price to then expand lower. You can see that 25% level here became quite relevant in terms of how price treated it. It wasn't ideal that we opened and ran above that 50% level, because I remember I did say how I didn't want to see price go above it, but it did. There's nothing we can do about that. But one thing to take note of is we can look at the range of the gap. Now there's a whole lot of gapping going on recently, so this is what's making things quite difficult. But if we look at this gap range, in fact, let me just make it a square for us, a rectangle from here to here. You can see how price used this. So we traded to the bottom of it, filled it, and then left it. So delivery has been delivered on the downside of that gap. Remember, this is a volume imbalance, so we've seen it deliver on the downside, upside, and then it's left it. So I don't expect price to need to return back up to that. So moving into tomorrow, I am pretty much remaining with my bias. I still want to see us trade into the 4-hour volume imbalance. I am expecting this beautiful sell side liquidity pool to get targeted. And let's take a look at the daily. I haven't actually seen it yet. And yeah, you can see we've had a massive down day. There's that 50% level, and you can see price is starting to close below the volume of this. But it's looking like as soon as we take out this sell side liquidity, this will then become a bearish order block, but we can talk about that tomorrow. And then here's that original gap I was talking about, which I'm looking for price to trade into. So pretty basic, again, disgusting conditions, and you can see it in the price action with how fickle it is, how high resistance it is. But I'm looking at the 4 hours, seeing this large expansion is all supportive. And yeah, I'm just looking for us to fill this 4-hour imbalance, and after that we have to wait and see, because by the time it fills this 4-hour imbalance, especially with the kind of news we have this week with PMI, I can imagine it's going to consolidate until NFP. Thursdays on weeks of NFP tend to be a mess, so it makes sense for Wednesday to deliver to the target, and then Wednesday to deliver to the target, and then Thursday will consolidate, and then we'll have obviously a large expansion one way or another. So we'll obviously talk about this in tomorrow's video a little bit more, but generally speaking, seeing the way we've expanded down below is all in line with what I was saying yesterday. And also, you see this bearish order block? I like the fact that we've closed below it. So if we drag this through, again, this is another PD array which I'm looking at, and I can see it's acting as resistance. Like the fact that price has managed to disrespect it so aggressively. When we see things like this, it's important because it signifies bearishness. In fact, in that it's not respecting it at all. You know, it's completely bypassing it. Like it's like a signature to us saying, look, I don't care about no bullish order blocks. I'm bearish right now. So where are we heading to? Again, 4-hour volume imbalance. If you want to get very specific, this is where no volume has traded, because obviously we have this wick. So this is more particularly where I want to see price get to the very low of it. It'll be nice to see if we can get down into there. And then moving into the new day, again, any kind of rallying above that midnight opening, are we looking for setups with the expectation to see us expand lower and hit and close in that gap? And then from then I'll just be waiting, because again, ICT always states get your trading done by midday on Wednesday pretty much, or by Wednesday afternoon, and that's pretty much what I want to see happen, and that would support that. Yeah, inversion fair value gap, there's not really much more for me to say. Price is going as planned in terms of as what I wanted to see, so I can't really complain. And yeah, in terms of rallying, where could we rally to? Let's go to the 15-minute. And what I mean rally is like, where's the highest I'd want to see price trade tomorrow? This is a bit difficult, because obviously when you have highs like these left intact, it's tempting to think that price will go up there, but I do doubt that we were going to see much rallying at all. I wouldn't be surprised if even the Asia session just offered us lower prices and price started trading. So we do need to consider that as well. Let's take a look at this gap. Have we closed this gap in yet? Yeah, so we're at the bottom of this. So this is, let's consider. So we have a massive 15-minute fair value gap that we're currently trading at the bottom of. So the midpoint of this, as far as I'm concerned, now that we're below it, I don't really want to see price trade back above that midpoint. So let's get that midpoint delineated. We'll make it a straight line, and you can see how that's lined up with those highs. You can't make that stuff up. So again, I'm fine with us rallying, but ideally we don't get above that 50% level. I'd like to think that we can stay below it. That'll show a strong level of bearishness and help us run into our sell side liquidity pools quite smoothly, and then obviously hit our original target of this volume imbalance low. So that's pretty much everything on dollar. Let's go to GBP USD, and I will quickly 1 second. So here is a trade. Well, it's obviously a paper trade, but I wanted to copy what I was doing just to show you guys. If you remember yesterday's video, I was saying that London session, I'll be looking for setups to go long with the expectation to run out this buy side liquidity pool. And you can see 3 o'clock is when the setup formed. So that's where I went long, and you can see we dropped down into a fair value gap right here. So I went long in there, and then I just leave them once I'm in a position for the day. I'll just leave it, and then these were the relative equal highs I brought our attention to right here. So you can see you wait for the time of day, and then we didn't reach that target until 12 o'clock. So how long is that? That's 3 hours, 3, 6. That's like what, 9 hours? Is that right? Am I tripping? Yeah, 9 to 12. That's 9 hours of time. So you have to obviously sit through all this, and this is why nowadays when I trade, I don't really spend time in the markets. I'll just enter the position and I'll let it reach its target. And as you can see, this is where a lot of people would have got caught out on the drop at 7 a.m. My stop loss I put below here. Why did I put it below there? I'll show you now in the 15-minute. You can see there's a bullish order block. So I didn't, as far as I was concerned, I didn't expect price to drop below that bullish order block after seeing us expand like this above these highs. It's classic price action. There's a fair value gap there, which I was happy for price to drop into. But if price went any lower than this order block low, I did put my stop below here. But if price dropped any lower than that, I wouldn't have been happy, and I would have just let price carry on dropping. So that's why I was happy to put it there. Again, I wasn't watching the charts, so seeing this drop, it wasn't directly affecting me. And then on the back of New York, you can see our price continue to run. And then as soon as I realized, oh shit, we hit our target, I got out of the position. So that's pretty much how I go about trading in terms of, time, and then I just leave the charts and then price, and then you can see we delivered beautifully. If we go to the daily, we can take a better look, and you can see our price came down. There's that 50% level of the inversion fair value gap, which I spoke about. We did overshoot it, but wicks are designed to do the damage. We expect wicks to do the damage, and then we beautifully reached our high, obviously, and now I'm expecting us to continue to trade on higher in line with dollar, ideally trading lower. So let's clean up a few things. I am going to just make it a little bit cleaner. So we have this 50% level, which still remains relevant, and then we have this high now, which I'm looking for price to trade off into. So let's get that marked out, and then we have a breaker as well, don't we? So we've got a low, we've got a high, we've got a lower low, and you can see how we've expanded. So I'm looking at this I'm looking at these down close candles really, but it's this high right here which I'm paying close attention to. But let's go to the 4 hour, and then this is the breaker I'm looking at mainly. It's the last up close before the down move that caused the expansion. So what we can do is we can drag out this range from the close, here to here, and I'm happy for price to tap into this. Very lowest would be 50%, but if we touch this, I'd expect it to be very sensitive to price to help send us higher. But like I said, we might not even drop lower, especially looking at this kind of consolidation. You see how heavy consolidation there is here. Seeing that, I'm not really too confident that price will need to necessarily trade back into it, because it should, as far as I'm concerned, the fact that we're above it, and I'll show you what I mean, and I'm using all the same colors here so it's getting confusing. Let's make it gray. This heavy consolidation, price will struggle to trade back into it. Don't get me wrong, it can, and it will wick, and it will do its thing, but it's acting as a guard for price, which is one, supporting our bias of wanting to see higher prices, but two, also showing extreme bullishness in that we shouldn't need to necessarily dip all the way down here to trade all the way up here. So that's just something to consider moving into the new day. Again, 3 a.m. I'll be looking for my setup, especially if this high is still intact and it gets to 3 a.m. Then I'll be looking for a long setup. Simple as that. Nice fair value gap down here that we may want to tap into, but you can see we've been in the consolidation for a very long time, and there's gaps in the discount, but when we have consolidations like these, I wouldn't be surprised if prices continued you know, like, because we're not done. This is just time dilation. I'm convinced that from this move here, this needs to get up to here. So there's not necessarily a need at this point to be retracing. And if we look at this range, let's look at the actual trading range between this low and this high. You can see that the 50% level is here, and we've already bounced off it. So if you study price action, you'll know that price, when it's going from one level to the next, it will get to the 50% level and we'll get a retracement. Have we got that retracement? Yeah, we expanded through the 50% level. That's this level right here, our far expected range. We've expanded through it, and then price retraced into the fair value gap, and now it's continued. And now we're at that 75% level. Look at how we're bumping it. Look at how we're bumping it. Look at how we're bumping it. You know, it's building in liquidity, because tomorrow I'm expecting price to absolutely shoot past it and get to our original target up here. So that, you know, you can look at trading ranges and figure out where we are at that stage, and you can see the same even on higher time for bigger ranges. Like if we look at this, look at the 50% level, we traded above it, tapped it again, and continued. So that's how I'm looking at price. And again, look at the 75% level. We found support at it. You can't make this stuff up. And then you can then split these levels into more levels like this. And you can see we're just at that 50% level. That's why we're finding a little bit of resistance. But I'm anticipating that price will be able to expand high, so long as dollar is doing as we expect. So that's how I apply Fibonacci. I should probably make a longer video explaining that. It's not as simple as just using that though. Remember, we have a bias. I've had this bias. I've wanted to see price higher all week. You know, I've had it. If you go watch Sunday's video, you'll know. So there's got to be some kind of leading determining factor behind it, some higher time frame factor. So let's now finish up on Euro USD. Now Euro overshot us by far. So if you remember, I didn't want to see price drop below here, but we would drop him pretty much as soon as I posted the video. Then we had high impact news on Euro, so that's not confused. This is where they take us out. Relative equal lows right here. You see how they're leaving? You see how price fails to take out this low? This isn't accidental. They're probably going to come for this on the back of non-farm payroll, so we should anticipate that. But again, I'm still expecting price to want to march up here. So same thing. I want to see a continued expansion. Let's go to the day. Let's clear things up. Let's go to the daily. And also, welcome to all the new subscribers. The channel's doing extremely well this month, or this year in general. And you can see where we expand into. I have got my eyes generally set on this bearish order block. I'm pretty not nervous, but I'm going to be interested to see how price acts once it reaches into that, especially because there's a breaker, high, low, higher, high in line with that. So I'm very interested to see what price does once it gets there. And then if it goes to the 4 hour, you can see that lines up with this pretty much rejection block level as well. So again, I'm expecting higher prices, nothing too crazy. I'm happy for price to dip down into this range. That's completely fine with me. Ideally, it doesn't get down all the way down here, similar to what I was saying on pound. I'm happy for that 25% level to get reached. I'm happy for this level to get reached. Why? Because 25% level is more sensitive than the 50% level. You can see we've already tapped it, we've filled this. So this is why I'm a bit doubtful that price will even need to drop at all moving into the new day. Or probably just start running with a pullback at 3 a.m. that will give us that setup that we're waiting for. And then we can start thinking about, trading. Any fair value gaps? There's a tiny, tiny, tiny gap right here, below these lows. So price might want to tap into that. But generally speaking, I don't think price is going to be taking out these lows until we've taken out these relative equal highs. I think they're engineering buy side liquidity right here, as ICT would say. And I think this is going to get absolutely swept moving into the new day. And again, if we haven't reached, we have this massive, look at this, that level that I marked out from the high time frame. Look at what it's at the top of. A premium fair value gap on the 5 minutes. So there's reason for price to want to draw up to here. It's not like it's just because, and there's also relative equal highs above here as well. Beautiful. Let's get this all marked out. There's that fair value gap. So it'd be nice to see us trade up into that. And if this is, like I said, if it's still intact and we get to 3 a.m, I'll be expecting some kind of setup to form that can help us reach that target. And then maybe from then we might get a reversal or whatever. But again, by then I'm not trading for the rest of the week because it's non-farm payroll week. So yeah, I hope that all makes sense, guys. Hope you found this insightful. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, join the Discord, and yeah, I'll catch you guys tomorrow. Peace.